we're going to talk about recent news that we were buying at $200 billion of mortgage bonds. Uncle Trump just decided that it's time to lower the interest rates. What do you think about you?
It's gonna be interesting, and I think, was it earlier today, I started seeing, like, on that, the mortgage interest rates fell below 6%. So, I guess it's gonna slowly trend down, which can be a good thing for home buyers and real estate investors.
Yeah, and that was actually was it Thursday night that he like tweet, he uses X as its own news media. So he like put on X that he's about to buy $200 billion. But it was right after also he said he was going to block massive real estate investment entities from purchasing single family homes. So he came out with that, basically blocking Lennar and BlackRock from purchasing single family homes too. Then the next day was this news of like buying 200 billion mortgage bonds. And why is that so challenging? Because the last time that we had in 2008 that we had a kaboom on the housing market was because the government went and purchased a lot of mortgages, right? And
Mhm.
so that's where we have like all of this like jumbo loans and like no income verification loans, even though the times right now are quite different and we have way more sets and regulations prior to like applying for a loan. It's still very much going to change the market, I think, because even the next day, which was yesterday, mortgages dropped below 6%. I checked this Mortgage News Daily website that keeps track of the average throughout the nation of like, so prior to the news, we were like a 6.2 on conventional
Mhm.
and dropped down to 5.9. So just him like tweeting something without even having to execute it, the market responded, right? But if you look at the actual indicator, like the 10-year bond didn't move at all. This is how like it's kind of weird that we like everything is reacting to what he's just like whatever he's putting out there, the market immediately reacts.
Yeah, yeah, it's giving the similar vibes of the whole Taro situation as soon as he tweeted something that he was gonna put like 100% on China or some BS, then the stock market would react, and it's crazy that now something kind of similar may be happening. And so it's a little frustrating because now it makes it harder to kind of like, strategize. It's always like you're trying to like plan any exit plans or anything like that, or strategize and plan as much as possible. And of course, like we don't know what the market will do, but it's a little irritating when it's just him just sending out a tweet and then the market reacts that way.
Yeah, it's definitely weird, but what happened today? The market went back up.
Oh, did it? I haven't checked
Yeah,
yet.
mortgage daily news, like I checked it every day. Mostly I'm like so nosy. I'm like, what else we do? But anyways, I'm not buying, guys. I'm not buying. I put a stop onto like the buying process. So
Yeah,
that's
we
all
were
I
just talking about it in our episode that we recorded of like what we were planning, and Lynn says she's not going to buy anything this year. We'll see.
we'll see. I was telling somebody, the wholesalers that I bought a couple properties from last year. He reached out to me. He like sent me a deal. I was like, actually a really good deal. And then I was just like, no, you can't do that to me. You can't just like jump in and like tell me like this is good for you. But anyways, I was just like, um, I was like, "No, I'm staying put. I promised myself I'm just not gonna get into another burr. Like you did 5 burrs last year. You're fine. Like you're fine. You don't need to do another burr."
Yeah. I think the other thing that I saw was that he was talking about being able to take out like money from your like investment retirement accounts without like penalties and stuff. I can't foresee anything negative besides that you took that money out of like the account. But if you're using it for like house hacking or a burr or something like that, then you're still investing. So I think the only caveat for that, if that does come, like I haven't checked to see where it's at, that to make sure that you're still try to get that money back into the stock market so you don't lose out on that. So
Yeah. I know that during COVID, I was not aware that this was a thing that you could get your money out penalty free. Not that I would have done it, but it's definitely something, you took advantage of the things that you have, the market provides, the opportunity that provides, right? So it's like very enticing to like touch the money, even if you don't have like a particular investment to do so, right? Like we
Yeah.
started investing through the eyes of like the fire community, and like that's like basically don't ever touch the money, don't ever touch the retirement.
Yeah,
Like,
yeah.
it's like you're safe for all. But I also have touched my retirement account multiple times throughout
Mhm.
my lifetime, and it's turned out to be a great decision at the time because I was putting money into high investments. But I don't agree with like every American should empty their retirement accounts to like upgrade a kitchen or something like that. Like
Yeah,
that's or buy a new car or but if you're truly dwelling under debt, which you do have the restrictions. Like if you are like in student loans, you can take out some money, or like purchase your primary residence, you can take out like $10,000. You have that exclusion. So I agree with those things. It kind of forces the average American to like save if you're contributing.
you kind of were talking about was that he was going to prevent like all these big corporations from buying up single family homes. So I'm curious on how they're, especially since he has some properties as well, but I think he is, I don't, that I know of, I don't think he has like, I think all his are like hotels and commercial properties. So I guess it doesn't really matter to him. So
Yeah.
I'm curious to see how, the like, how that's going to work out.
Yeah, I was looking up some data actually about that, like
Mm,
massive, like BlackRock or Lamar or whatever, Lenark, the properties that both of them, like majority of the things are building, and they actually only account for like 3% of purchasing power and real estate.
mm,
So I don't know who he's calling like major entities. Like, are these S corps? Are these like people that have over 100 houses, buying over 100 houses in the last year or so, like over
mm,
500 houses. And then they were like saying also too, like, what are the big companies gonna do if they are stopped from buying single family homes? They're just gonna open up little companies under
mhm.
a different corporation, different LLC, and then continue to purchase until they hit the limit, like 100 houses or whatever.
There's always a way or a loophole through it, so it's kind of like, how effective is it going to be? And like you said, it's like, I get the grand scheme of things is not as crazy as thought. I think other things contributed more to the housing, affordability issue, like insurance and the property taxes went crazy, and then all this other, obviously the market and stuff. So, yeah, I don't know how effective that's going to be either.
Yeah, we'll see. I think that this year is going to be, for me at least, about optimizing. I think we were talking about earlier that, but for you, it's going to be scaling. So I'm excited for you.
I'm excited and we'll see how this goes. The goal is to hopefully buy two. That's going to be because like last year I didn't buy because I was stabilizing, I was moving, I was like left my job, everything. So it was just too chaotic. And so I didn't want to put myself more at risk, even though I could definitely try. I was definitely looking, but I just didn't find something worthwhile. And then, especially since I was still stabilizing the other property that I had bought in at the end of 2024. So yeah, I'm just going to try to get two this year, and
Yeah.
we'll see how it goes.
And you haven't decided if it's going to be in the Midwest or near you.
So, we kind of mentioned it. Was talking about it in the episode, but like of how I was working on a deal, and that realtor is just like having now just sending me properties that kind of. So she sent me one yesterday, here in San Antonio that might fit, you know, what I'm looking for. The only problem is that they wanted a cash, only. But she reached out and tried to see if they'd be open to like maybe seller finance. If not, I'm just gonna go and try to maybe get a conventional loan or something like that. The only issue is because now that I left my job, I am getting income right now, but I don't know if it's gonna be sufficient. I haven't gone through all my finances to see what my debt to income ratio is now because I have those 2 properties, well, 3 properties under my name, and the 3rd one, I haven't filed taxes on it, so that's gonna be this year. So, probably not going to be counted if depending when I, get the loan. So, I don't know if my debt to income ratio is gonna be too high because I definitely dropped I went from a six-figure job to now it's, like, bringing in just like half of that. Another thing that I have been noticing because I've been just kind of like glancing and looking and window shopping basically is I have been seeing like properties coming down. They're sitting a little bit longer. And with this deal that fell through, a lot of negotiating was happening where like before it was just like, oh, you had to kind of try to be the best one right away. And this one was a lot of back and forth, meaning that the sellers are more willing to negotiate. They were still doing like where they were paying like some closing costs like the realtor fee and all that stuff, the commission fee. So I think it's more balanced right now, at least in the 2 markets that I'm in.
Yeah. Yeah. And then I think I ran into the same problem last year, where my debt to income ratio, because multiple properties were under my name. And then I also have a property in Los Angeles. My debt to income ratio overpassed, right? And I started purchasing DSCR, which initially I was like, oh my God, DSCR, I'm going to pay more closing costs. It's going to be more expensive to acquire the loan. But it was relatively about the same. I don't know when during the last year there was a turn in which DSCR became quite competitive, even offering a little less than conventional rates.
That's one thing Imma look at as well. I have one here that I talked to. I gotta follow up again and kind of see, okay, where are we at? How much are you gonna ask? Stuff like that. And then and see how that goes. So got in touch with a hard money lender and see that avenue so that way I could see all my options. So when I go and maybe find another similar property, then I'm more like prepared with this deal because I definitely was winging it. I was like, all right, I'm just gonna get it and then I'll figure out how to get the money to like rehab or just get a loan or something myself.
We have to do a deep dive on this deal because it was so creative and so like
Yeah.
you definitely have to make sure that you get all of the things sorted out. Like the layout of it was very funky and
Mhm.
we have there was a lot of potential, especially because you told me there was a university close by.
Mhm.
There's a like church also that is close by. I think I look at it. We were taking a look at it. Oh,
Yeah, yeah, definitely. Gonna do either an episode or maybe we'll just do the live that turns into episode. I just gotta get all like the informations for it so we could go through it. I have videos, I have the pictures that they had on there. It's pretty cool. It was a pretty cool property. Like I said, I was telling Lynn, I was bummed out that I lost it, but sometimes I am a very strong believer that when you feel like resistance or like some things are a little bit harder to get, which was with this property, there was a lot of going back and forth. I had to wait a long time for the blueprints. And on top of that, I had to wait to be able to call the city and check on the permits and all that stuff. So there was like a lot of resistance. So I feel like maybe it was just like the universe telling me, like, you know what, not yet. Like maybe this is too much for you. And I don't know what's going on with my freaking camera. It's always every time. I don't know what to do. And then on top of that, the sun is in my face because I put my desk in a wrong spot. So later today, I'm gonna have to move
yeah.
in.
I have this problem. I'm right in front of like two big windows, and like across the seasons, some of the times the sun is right on my face, especially at like 5 p.m.
Yeah.
But going back to the original topic, the $200 billion mortgage bonds, I don't actually foresee. I think a lot of these things are um, just try to get a raise out of people, get a raise out of.
Mhm.
I'm not 100% sure that rates are actually going to come down this year. I'm not like maybe if they do come down, they will be like a quarter of a point. Like right now, 6.0, right? 6.1, I think right now, like 5.75 or something like that. I don't truly believe that we're going to have like a huge draw, but if they're gonna put me around, they're gonna put me around. Imma start refinancing all my properties. But
Yeah, exactly. Like if I'm wrong, that's awesome because then I'll go, yeah, refinance everything. But yeah, like I don't think it's gonna be such a significant change to where like if somebody is out there waiting for like the perfect mortgage rate or hoping that they're gonna get down to like the 3.75 or whatever back a few years ago, trying to wait for that, like, just go with the flow, like go with what is available right now, and if the numbers work, then they work, and then still go for it because Lynn and I, we talk about how there's still a cost of missed opportunity. There's a cost, there's a loss of waiting, and that's potential income, cash flow, and all that you're losing out on because you're waiting for the perfect mortgage rate. So, yeah, definitely don't wait on that. I did see because I was looking at that they want to relax the regulations on building so that way like more homes are built faster and easier or whatever because they don't got to jump through hoops. And I wanted to see what you think of that because I definitely like I'm like,
I think, like, in California, there's, like, overregulation for sure. Like, just getting permits is, like a month's process. So I'm interested to see how they're relaxing the regulations out here because, like, like, our own little thing, right? Like,
Mhm.
we whatever the federal says, and then the state does whatever the state wants kinda thing. But
Yeah.
what kind of regulations? Because I feel like there is a lot of room here to build, even though it is expensive to build, even though it's time consuming to build and all of those things. But there are like the ADU play here, like in single family homes, if you're a small investor and then you want to invest in California in your backyard and you don't want to go to state and you're willing to like self manage and all those things, like in one little single family plot, you can technically have two additional units, right?
Mhm.
With SB9, you can have an additional house, actually. So it's kind of crazy that you can do all of that in like the one single family plot. But I'm not in the commercial space. I don't know how hard it is to like acquire land and develop it and grade it and like easement and all that. So I'm assuming that's gonna take a long time. We have like a condo structure that's gonna be apartments, like just maybe less than a mile from my house in construction for like 3 years.
Wow.
So, like, I guess it takes, significantly longer time to build for sure.
Yeah, yeah, I think so because I'm trying to remember how long because I was in Poway, over there by San Diego, and 2 new buildings were and I think it did take, like, 2 years
Mhm.
probably 'cause I kept seeing, like, "Oh, they're gonna do something there, they're gonna do something there." And then but I think once they go through all those humps, then all of a sudden they, like, pop up kind of pretty fast. Like, matter of fact, I was gonna try to move into one of them. I was like, "Oh, interesting, 2 years ago, or 3 years ago, there was nothing there, and then now that I have to, like, go back to renting, now it's available, but the only I couldn't get it because I still had my dog and they didn't allow German Shepherds. In that same area, I remember going on a walk towards the very back, and they had, like, a whole bunch of, like, lots from, like, old rundown houses and lots that were back there, and I guess a builder had bought them, but it was just they just fenced it off, and I guess they were going through all the regulations, before they could start building and stuff, so I think I'm a little bit, it depends because a lot of times, most of the problem is that the government's really bad at doing anything with paperwork or anything like that, so, like, things sits at somebody's desk, and they'll do it when they get to it. The processes is always crap, and I know because I worked in government, so, like, there's a lot of things that's like, "We could do this better, and that's why this takes long," but I think the only issue I have is with the rules and regulations that we have right now, like, the builders are not doing the best and trying to hide stuff. Like, if you're, like, going to, like, TikTok or even on YouTube, you'll see when, like, these home inspectors go to these new construction builds and, like, they really try to just do whatever just to get the house done, so I can imagine if the rules are if they're doing that right now, like, now with less regulation, probably going to be even worse, which means that as real estate investors, if you're going for these newer houses in a few years or whatever, something that to think about that a lot of corners have been cut and stuff. So that's
Yeah.
my only thing about that, that I just don't trust the builders to do the right thing, like zero integrity on their part.
Yeah, I don't know how that's gonna be, like, relaxed, meaning you're not gonna be as supervised, or relaxed, meaning we're gonna accelerate the process of permitting. Like, I don't know. I don't know what exactly that means, but, like, it took 8 months for me to get plans approved for my ADU,
Mm,
and 7 months to actually do the ADU, so that's, like, a year and a half of
mm,
being a 400 square feet EDU. Should have taken that long? Probably not. But there was like some stipulations because power lines and stuff like that. But also that was pretty long. But I know sign up for it, so I already know. Like I educated myself before going into like this could take a year. This could take
mhm. You had that expectation. You knew what to expect.
it's not gonna stop me from doing it.
So BuzzTune says moving your portfolio to LLC. Could you talk more about the thought process and how it's going? Because you have LLCs.
Yeah, so I started an LLC last year, but I didn't do anything with it because
That's me. I have two. Well, three technically.
yeah,
Yeah.
because we're growing, so we gotta think about liability. And even though buying purchasing my homes and having umbrella insurance and have home insurance and all those things, I do want to move all the portfolio into an LLC as well because I'm also opening a new company this
Mhm,
year for my own practice. So like we I need to think about more legal stuff more so now.
mm,
Uh, and then so there's the way that a lot of people do it, and there's the right way, right? The A lot of people do when the home is personally on your own name, and then you wanna just put in an LLC, you could claim the property into an LLC. Majority of the banks will consider that a transfer of title, right? And they could technically call the do and sell clause that all of the loans have if you have a
mm,
loan property. They could call it, could technically from what I hear from different bankers, it's like they don't like to do that. If the LLC is more than 51% on your name, meaning if you
mhm,
don't know the partners in the LLC, then it's going to be fine. They're not gonna make you do on sale clause or refinance or whatever. But the right way to do it is to like replace the loan. So like what I'm doing right now is like I have a property I bought cash, rehab cash. Now I'm cashing out refinance into a DSCR to put it under an LLC. And then also I have another property that is conventional that is at a 7.5, I think, interest rate that I'm gonna um refinance and to put it in an LLC at a 6.6, I think. I think that's the last quote that I got. So that is the process that I'm doing right now. I'm not quick claiming from my name into LLC without the bank knowing. I'm like actually refinancing
mhm.
slowly. But the also I have 4 properties under seller finance. So technically they're not under my name. I mean, there's no loan. This shows because the seller finance loan person is a person, right? Not a bank. So it doesn't show under my credit score. When they pull my credit score, it doesn't show that I have a property um there because it's like a private mortgage to a person. So
Yeah, that's why I was trying to go for this seller finance because I wasn't sure about my debt to income ratio right now. It's on my to-do list to go through and I was like, all right, let me see where I'm at and then call a lender and see what's going on with that. But I might just like still maybe try the DSCR route. And then I remember sometime last year I called two of the lenders for of my mortgages, and I asked them, I was like, "Hey, this is what I'm trying to do." I was like, "Are y'all going to call to do the uh
so close.
or yeah, that." Think right out the sun's in my face, frying my brain, I guess. Yeah, both of them said no, but I definitely am going to call again and because that was just like a customer rep, I
Mhm.
think. So I want to make sure I talk to somebody a little bit higher just to double check. But I don't, so far, two of them had said no. I haven't done it yet because I was going to do like what you said, just like transfer it really quick over. But other things that I need to think about is because I have like the leases and then my property manager. So I got to talk to him and see, okay, so if I switch it over, like what's all the logistics? Like, do I have to create new leases? Do I have to like, what do I got to do? Like, and then obviously a new, probably a contract between the property manager to the LLC. So yeah, all of that is what I have to ask, and what costs is going to be associated with maybe doing leases up again or whatever. Or and I have Section 8 housing tenants. So what does that mean with that once make the switch? So that's a little bit of research on my to-do list for January/February so I could actually use these LLCs because I have two. I did the setup that most people do where you have like the holding company and LLC and then so on. So yeah. So we'll see. That's on my to-do list this year to move them over to get the one for liability and two so I could go out there and get more.
Any good reasons to move into an LLC. Not only that liability, which it should be number one, right? But also your business has the debt now. So your name is clear, right? Technically. And if I had like really good interest rates, like 4 or 5 or whatever, then I would consider doing the quick claim deed into the LLC. But I don't. I have pretty shitty rates, like 7.5, 7.3, 7.1. So if I can take a fix, like a rate of rate in interest rate fix
Mhm,
adjustment and, put it into an LLC, then might as well do that. Like, even though
mhm.
closing cost again, it's negligible to me because my loans are smaller too. Like, I understand like when your loans are bigger, the closing costs like take more, right?
Yeah.
Like 100K under 100K. So my cost of like purchasing points or doing any of that is like 1,000, $2,000. So it's the significantly lost. And everybody knows, no, not everybody knows. I shouldn't assume everybody knows like the interest rate that you paid up front in the first, second year, your negligible principal you have paid down, on
Yep.
the
I think my recent one is at 7.5. So, but that one I will probably, we'll see how I could get that one out. And then the first one, I think this is year 5 that I own. So probably towards the end of this year, have some equity that I might be interested, but also I have a good interest rate on that one. So maybe a HELOC or something. I don't know. We'll see how I
yeah.
can get money out from there. And then, yeah, like I think the other thing somebody mentioned was like the insurance rates might go up if you move it into a LLC. I don't know how accurate that is.
So what I do is like I'm the first payer and my LLC is second payer. So I still get the insurance because I don't have any partners, right? So the insurance gets paid out to me and my company is also additional insured.
Okay.
So that's how I go around it. I don't know if that's the right way. If you go in the comments, do you notice when you purchase a homes and then you put your home insurance under your name or only your LLC name?
Yeah. Other than that, I think that's the only news that I could think of.
Come back next week, and if you haven't already done so, please check us out on Real Estate Jefas.
Yes. Awesome. Bye.